So here's the problem that a lot of people, when they start out trading, or even people in the middle of their trading career, they don't know exactly what they're really looking for when it comes to what type of trading style they're looking for. It could be scalping, intraday trading, day trading, swing trading, position trading, algorithmic trading. There's so many different ways of trading, and people don't know which one is more profitable, which one makes the most money, and which one will make them a living, like how I'm doing. And that's exactly the point of today's video. I'll be covering which one's the best in my opinion to make a living off of, to generate full-time income off just pure trading, so you can enjoy your free time as well as travel around the world. So let's get straight into it. Right here, I have 5 options today that we'll be drinking. Okay, we got scalping, intraday trading, which is also known as day trading, swing trading, position trading, which is like long-term investing, and then last but not least, algorithmic trading. And honestly, I'm just going to start off with the very ones that stand out the most. Like algorithmic trading. Is that the algorithmic trading? Yeah, that's the algorithmic trading one. I don't know if you guys can see the bot right there, but that's the algorithmic trading option. That is clearly S tier. You guys know nowadays with everything being electronicized, with AI and algorithms and bots running everything, especially when in the market, I'm almost certain, 100% actually certain that it is ran by algorithms filling everyone's orders. There's no such thing as people clicking the buttons anymore on Wall Street trying to manually fill your order in. There's just too much liquidity for people to be doing that at this fast of a rate, at least when how the markets are moving now, how fast everyone's getting filled. So it's all based on algorithmic programs and algorithms built by different firms and institutions that run the market really at these exchanges. So algorithmic trading has to be S tier, meaning it's the best or one of the best options if you're trying to get into in terms of what type of trading you want. But the problem with algorithmic trading is it's very high demand. You need to not only know how to trade, how the markets work, how price action works, but you also do need to have very complex coding and programming skills and data analysis driven skills. If you don't have these skills or these expertise, it's going to be very, very hard for you to make something that generally works, because most times algorithmic trading is passive and not something that you're actively there watching a chart and clicking buttons. But I will say for algorithmic trading, you definitely need to be monitoring, of course, your bot every single day, either at the end of every trading session or so, to make sure that everything is good to go. And of course, there's a lot more things that are complex, especially in terms of skill, that you definitely do need just to be an entry to barrier to doing algorithmic trading. Like you also need to learn how to host your bot on the broker through different, you could use virtual private machines, virtual private servers. I've done it before, so I know how the process really works. But a lot of people that are new or trying to get into algorithmic trading, they don't even know how that stuff works. How you can actually have your trading robot run 24/7 without your computer on at all. It's all through a virtual private server, through a virtual machine. And you could buy one of those as well through a third-party platform. And you basically get your trading view to send PineScript alerts to a Pinehook connector, for example, or different third-party algorithms, or not algorithms, third-party programs that can help transition these alerts to be from your bot to your trading account. But again, this is definitely a lot more of a complex process, and a lot of people will not be doing algorithmic trading just because of how much time and resources really need to dedicate to algorithmic trading. And there are certain things in trading, even in your strategy, that's impossible to program, because what you would say is easy to a robot that's trying to mechanicalize your strategy fully. It's going to be hard. It could potentially be hard because the human brain is a lot more advanced in its understanding and how things are put together, while robots are not necessarily the same. They don't think the same, right? So they need something that's 100% mechanical. If you don't have a 100% mechanical strategy, it will not work well. So again, the reason why algorithmic trading is an S tier, because institutions and very smart people that like graduate from top schools, for example, that have do quant trading, things like that, they all use algorithmic trading and they monitor their algorithms rather than manual trading. Is really how it's not. I wouldn't even say it's the future. It is how trading is nowadays, especially for these firms making these insane returns, right? Risk-adjusted returns every single year. So that's algorithmic trading for you. Now I will say algorithmic trading, depending on the trade frequency, it could actually make less profit than someone that's manually trading. So keep that in mind. Don't get discouraged by manual trading. It's nothing in terms of superior inferiority, because algorithmic trading can definitely make a lot less profits than manual trading, because manual trading comes with experience and discretion that you cannot program into a bot. So that's algorithm trading at S tier. Next up, I'm gonna go with the second most common one, I'd say, or algorithm trading is common, but it's common for obviously not normal people. But the most common other thing I would say is long-term investing. I'll put that at A tier. You know what? Because I believe everyone should have, or at least do long-term investing at some point in their career. Earlier the better, of course, right? Open a regulated broker and start putting money in, really, and just maybe investing your paycheck, or I don't know, depending on what business you run. For example, you could be putting percentages every month, every year, quarterly, however you want to do it, into a long-term investment account. And over 40 years or so, you will see, your profits grow, right? Your money work for itself, because inflation, for people that don't know economics 101, and every single year that you have your money in your bank account, for example, that's not a savings account, you're losing money, because the power of that money is less and less, right? Due to inflation. So therefore you need to have some sort of investment to keep up with inflation if you're going to be saving your money. At least if you're going to be spending your money, then that doesn't matter. But definitely when it comes to saving your money, which I hope everyone should be doing at least somewhat, right? You definitely would need something like this for sure. So long-term investing, I'll put it A tier, only because you're not going to make much percentage in terms of returns for long-term investing. If you put in S&P, you'll make 10% annually on average per year, even after red years. That's just a statistic I just gave you guys, so you guys don't have to look it up. But S&P, you can also do NASDAQ, so QQQ. Those are very good. If you want triple leverage, you could do SQQQ or TQQQ. So TQQ goes along with QQQ, with the NASDAQ, and it's triple leverage. So if the QQQ, which is NASDAQ, goes up, for example, 100, let's say 100% within 2 years, that's very possible. I believe that literally happened this past 2 years. So 100% in 2 years. If you're investing in TQQ, it will go up 300%. Your portfolio is triple. But SQQ is triple, but the opposite inverse of QQQ. So you'd be down, however that much that is. So long-term investing, I'll put at A tier, only because, right? Only because you don't make much returns from it. But it's very good passive income. But if you really know how to trade, it's not good. So actually, I'm gonna share my opinion. I'm gonna put a B tier, only because you can make way better returns trading a strategy that generally works, like what I do, than long-term investing. But you also do need more time. So it's up to you how you want to put your time, invest your time in. Next up, we're gonna be doing scalping. I'd say scalping, I'm gonna put this at the same tier as investing. And the reason why is because scalping is, for those that don't know, it's basically taking several trades a day, right? There's no definite number for a definition of scalping, but typically you're in and out of trades. I mean, you're entering and exiting trades, either hitting stop loss or TP it could be within seconds to a few minutes, right? Usually you don't hold past like 30 minutes or an hour typically, or not even close to an hour for scalping. People are in and out very fast. So your trade frequency is very high. And what happens when you have very high trade frequency is commissions add up a ton, right? And also spread. So spread does cut into scalping. If you're scalping, you're usually catching very tiny moves in the market. And so spread is a big factor that goes against you in terms of the amount that you're winning compared to you're losing, right? Your risk reward. So scalping, I'll put it at B tier, just because you could definitely make very good returns that are for sure outperforming investing if you know what you're doing with scalping. The only problem is, again, those commissions really do hit you hard. I'm not gonna lie, I've done the math on them when I tried doing scalping for a little bit, but again, I wouldn't say personally I'm a scalper unless I change my strategy. I have like a strategy, right, that could be either day trading or scalping. I could change it to scalping and it'll have a way higher win rate, but it's just, if I change it to a different fully scalping with a lot of trade frequency, commissions are gonna add up too much, and it cuts into your profits significantly. So I'd say scalping, because of commissions per trade, I'm gonna put at B tier. And also effort, right? When you're scalping, you're putting in a lot of effort into trading actively. You're actively trading in and out all the time. And you could say you could scalp for maybe an hour a day, right? But during that 1 hour, it's a very focused session where you're actively trading and monitoring charts every second. So you could say it's definitely a lot more stressful for people, especially that are new to trading. If you're not new, you get used to it. Trust. Next up, I'm gonna say swing trading. So swing trading, I'm gonna put that at. I like to put swing trading. This low key might be biased, but I'm gonna put it below in long term investing. And hear me out. The reason why is because I think swing trading, typically the returns that most people make off swing trading strategies, I wouldn't say it's very close to investing, but it could be, right? Especially if you're investing in triple leverage, like I said, TQQQ, and if the market's doing very good that year, it could be close to long-term investing, and you're putting in a lot more time in swing trading because, well, you still have to monitor the charts, you have to make decisions, and some of those decisions could be revenge trading, right? It could be psychological mistakes that go against you, and you're still putting in time and stuff to learn swing trading. So I think most of the time, I feel like if you're swing trading, you might as well just do long-term investing. Honestly, in my personal opinion, I wouldn't say it's a lot more secured, because if you do have a working strategy and you're following your strategy perfectly, there's no such thing as really security in terms of that you'll lose money swing trading over the long run if you're doing it properly. But I will say long-term investing would be just a safer bet, and more so just a more passive way to make this almost the same amount of money as swing trading. But again, depending on how you like to trade, if you're a full-time trader, then for sure I'd agree with you that swing trading is better. If you have a huge account, just because you could make even that extra double return a year, let's say, maybe not double, but it depends. Maybe even 2 times return a year is significantly a lot more if you have a big account. So swing trading, you know what? I'll move it at B. I feel like I don't want to put any trading thing really in C or D tier. I think the only thing that really makes any of these C or D is if you don't know what you're doing. That's why I offer a mentorship and course that's paid, of course, right? You have to pay for your education, just like college degree, to learn how to learn properly from someone that actually knows how to do this stuff. But I wouldn't put it as C and D unless you don't know how to trade. So if you don't know how to trade any of these trading strategies or systems, then of course it's going to be a D tier. You're losing money, right? But if you know what you're doing, you're not losing money. So last but not least, we have intraday trading. I know the text is kind of like funky because it doesn't say day trading. I think I cut off here actually. Let me see. No crop. There you go. Perfect. I think it was originally like this. Yeah. There you go. Now you guys see everything. Perfect. So I'd say day trading is basically what I'm doing, what I teach in the course and mentorship. Again, like I said, you can convert my day trading strategy into scalping. All you really do, since price is kind of fractal, is you just go to the seconds time frame or go to even lower time frame for your entries and modify just how you use different time frames to scalp. But again, I don't really go super in depth into scalping like that. It's mainly day tradings. Mainly my trades are around 15 to 30 minutes long for my winners, and my losers I get out pretty fast. Honestly, within 5 minutes sometimes on average, I get out my losing trades. So I have high risk reward when I'm trading with a good win rate still, which is what you are really looking for. A good balance between both, preferably if you have high win rate, high risk reward, but most times they are negatively correlated. But again, I'll put this at S tier just because if you know what you're doing, you can make way more returns doing day trading than swing trading and long-term investing and even algorithmic trading if you really know what you're doing, because we're using a human brain. Now the only problem with the human brain, since it comes with discretion and experience as well, the only problem with the humans, us clicking the button to buy and sell, is psychology. So psychology really is like the only thing really in the way when it comes to mainly trading compared to algorithmic trading. Otherwise, if you could fully automate like my strategy, my main strategy, if you fully automate it, the returns would be absurd, and I'll probably run into liquidity issues, right? Because it's able to take and trade every single session, every single second of the market while it's moving. While if you're mainly trading, you're gonna likely not trade every single session because that's a lot of time per day. You'll get burnt out pretty fast, and also likely you will be making emotional decisions at that point. While algorithmic trading, you don't. So the only downfall really to manual trading is the emotional decisions, I'd say. So actually, yeah, I'm gonna keep it at S tier just because I was thinking about putting it in A tier because of the psychology, but there's higher potential of returns than algorithmic trading. So I'm gonna keep it on the same level as algorithmic trading just because of that reason. So honestly, That's why I personally am doing day trading, because I think it's the best out of the other four options. Algo trading, I still haven't fully figured that out yet. Again, I've gone into it, I've done it, tried, tested a few things, but the returns just aren't as good uh, as me manually trading. So I'd rather just manually trade, because I need to make a living off of my trading profits. So that's why I stuck with really day trading as my main system. And again, scalping, the commissions just add up too fast. And day trading, you're not taking as many trades, so less commissions that you're paying, and spread does not affect you as much, because typically you're aiming for a bigger move, right? Usually I'm aiming for the big expansion move, or at least the pullback of the day. That could be very big. These pullbacks on a daily time frame could be very, very big, right? So again, that's basically it for today's video, going over different types of trading that you guys can do. Hope you guys did learn a lot from this video on what you want to do. If you're new, you should now know which path you want to take based on my advice. And if you're not new, you should know at least where you stand on this tier list. So yep, that's it for me. I'll see y'all in the free Discord, as well as the mentorship and course.